legend. Satish is a 30-year veteran of investing in and across all asset classes and geographies. He's here with Damien Steel. Both of them are from OMERS to discuss their views on how a fund of this size can ensure long-term value for their investors. Please join me in giving a warm welcome to the Chief Investment Officer of OMERS, Satish Rai, and Managing Partner, Damien Steel.
Awesome. Hi, everyone. My name is Damien Steel. As you heard, I'm the managing partner and head of the OMERS Ventures program. I get to do these a lot. Usually I'm asked to come and talk about venture. So when I was asked to come here with our CIO to talk about something larger than venture.
First of all, OMERS is an Ontario-based pension plan. We have a little over $100 billion of assets that we manage for 500,000 people in Ontario. Firefighters, police officers, and city workers. So our job is to provide secure, stable pensions for the rest of their lives after people have put in 30 years helping the cities of Ontario out. From my point of view, one of the most important services we can provide is safety in long-term retirement, and that's what a defined benefit plan does. And my role within OMERS is I'm the Chief Investment Officer. I get to look after about 300 investment professionals around the world, looking for the highest quality asset we can possibly find to provide secure, stable pensions.
So I have to imagine most of the investors on this stage are probably very focused on one particular asset class. You know, I spend my life looking at venture companies, and I've gotten very used to what to look for in those companies. But you have a very unique perspective. You know, you manage $100 billion of assets across, I usually tell people, every major asset category, whether it's real estate, infrastructure, private equity. So with that kind of top-down view, I imagine this answer would be interesting. Like, what do you look for in investing and investments generally?
So one of the things I found that it doesn't matter if it's a venture investment or a nuclear plant, there's a couple of rules that I've always followed by. First is find the highest quality asset, highest quality partner, highest quality location with the best possible team you can possibly find, and stay away from short-term speculative opportunities. So if you look at some of the things that we have, we own a Bruce nuclear plant, and 30% of electricity that's generated in Ontario is generated by OMERS nuclear plant. So it's very long life, but it's best-in-class partners, best-in-class assets, long-term vision, and I think if you continue to focus on long-term vision, you actually end up in a better place. And Damien, the reason I bring this out is that I strongly believe that one of the biggest challenges we face as investors is that too much short-term focus. When you look at the venture space, it's really geared towards 5 to 7 year time horizons or 10. And that's where I think most investors' time horizons should be. And so our focus is finding the right asset that over a very long period of time is doing very well for us.
So given the breadth of assets that OMERS covers, you know, on the venture side, I talk about it all the time, because when we meet early stage startups, you know, nothing changes the game more than being able to say, well, you know, we own this building or we own this power plant, and let me introduce you to Yorkdale Mall if you're a technology and real estate and retail. Do you find there's advantages to being in those multiple asset classes and collaborating across those groups? Like, what's your thoughts on that, and how do you manage that with such a big organization?
So let me just start off by just highlighting a couple of the assets that we have. We would own Bruce nuclear plant, we own toll roads, we own transmission lines, we own London City Airport, we own the Port of Melbourne. So our assets are actually global. And we own a lot of private companies. But the real benefit to that whole ecosystem is that we invest in through ventures in companies with $50 million market caps and $500 to $5 billion. And the ability that we have to partner with the small companies, actually become a client of some of the venture companies, and become a client to be a test market for them, actually validates their business model. But also for OMERS gives us an incredible opportunity to see what the future looks like. And I think that if we're only investing in the $5 billion assets and forgetting about the $25 million assets, we actually wouldn't have any lens of what's happening in the world. And so through the ventures business, where we have 40 companies invested, we learn more from those 40 companies to help our $100 billion platform than we would from reading any books or going to any of the conference.
Yeah, it resonates with me. I'd say when I joined OMERS 8 years ago to help set up the venture program, I feel like we were beating down doors to try and get people's attention. And the great news is now across our entire organization, I would say we're being introduced, we're being drawn in to these various asset classes, whether it's private equity. These are investors that are making billion-dollar transactions, and they're coming to us and saying, hey, how is innovation disrupting these assets? How is autonomous trucking going to affect this business? How is this energy technology going to affect Bruce? So I feel it on a daily basis. Let's flip gears a little bit and let's talk about the other side of the coin, and that is, what mistakes do you see investors making from your position?
I think the number one mistake that I've seen for 30 years is people's time horizon is way too short. If you're 40 years old, you're going to retire when you're 65, you should be thinking about investments with a very long time horizon. There's this relentless focus to watch TV, certain stations, which draw you into thinking you should be day trading all day long. If you got a 30-year time horizon, why do you really care what a government official tweets or what happens in a day-to-day basis? What you're looking for is very long-term credits that you can capitalize on. So the number one mistake I believe is short-term trading, short-term focus, and lack of vision. The second thing is that there's too much emphasis made on the lottery ticket home run. And a portion of your balance sheet that should be there. But even in the venture space, we want to invest in great companies, great products. But there's too much speculation that takes place where people think the outcome of an investment has a 50% chance of going up. When in fact, the outcome of that investment is actually 5% up, 95% down. As long as you handicap that investment 95.5, I'm completely confident. Most people do not handicap that. So, lack of quality, short-term focus, and underestimating the risk that you're taking is probably the three biggest mistakes.
So just to build on that a little bit, but from a different angle, we've known each other for a while, and I know you're not just an institutional investor, but you're a private investor as well, and you like me, you get to see a lot of entrepreneurs working on all types of businesses. My guess is there's probably a bunch of entrepreneurs out here. What are the mistakes you see entrepreneurs make? Not investors particularly, and if you could, if you will get pulled aside when you try and sneak away after this talk. And if somebody came to you and said, Satish, what's the best advice you can give me in building my business? What would you tell them?
Well, let me start off by first saying I like betting on entrepreneurs. I think betting on the individual is as important as betting on the business, because if you've got a great business without a great entrepreneur, you're going to fail. I think if you're an entrepreneur, you want to get our attention, you have to have clarity of purpose of where you want to be 5, 10, 15 years from now. You have to have complete confidence in yourself to handle the peaks and valleys in your business model. And if you're thinking about building something to flip it for the next 6 months or 12 months, I think you'll fail. But if you start off by saying, what is the purpose that I'm here for? I want to change society. I want to make the world a better place. I want to wake up every single morning with this passion. And if you have that passion and purpose, you'll do very, very well. If you're in there just to make money and flip something, I think you'll always stumble. But really waking up in the morning with great passion, great purpose is one of the best things.
Yeah, that really resonates with me. I get asked all the time, what do you look for? On the venture side, we invest super early. We'll put $500,000 into a seed stage investment, and I'd say we'd go up as high as maybe 50 million. And I get asked all the time, what are you looking for in those investments? And unfortunately, the answer is always the same, and it sounds super cliche, but we're in the business of investing in people, not businesses. And especially on the venture side, if I look back over my career, I would say that most of the businesses that have been successful actually didn't finish off doing what they told me they were going to do when we first invested. But the one common characteristic in all of them was that they had founders and entrepreneurs that were just relentless in their pursuit of perfection, but weren't so tuned off to the real world and were able to adapt along the way as markets change or competitive dynamics change. So when I sit back and we get very tunnel vision in venture, and there's a lot of venture folks in here. Whether you're in Silicon Valley or you're in Toronto, I think it's important, and it will be interesting to get your perspective on, is to just come up above the fray every once in a while. And the problem today is when you do that and you pay attention to what's going on around us, it can be quite scary. Whether you read about government debt levels or low interest rates, or the latest Trump tweet. How do you, as somebody managing such a big pool of assets, how do you deal with that, and where do you focus your attention, and really what keeps you up at night?
So, first of all, the best time to invest is today. I've been doing this for 35 years professionally. I've seen more prices, more ups, more downs in my 35 years. We've got innovation, we've got technology, we've got longevity. We've got so many great things going on. We have lower poverty rates. We have a global ecosystem. The best time to always invest is today. The worst thing you can do is focus on all the negatives that are going on in the world, because in my 30 years, I've had at least 20 crises that I've had to deal with. And the crisis I'm going to have the next 6 months, 12 months, I have no idea how to deal with them or what's going to happen. But I can tell you, if you invest in the best quality business, you're absolutely going to be relentlessly, you will do very, very well. So the world today is set up to provide a massive amount of noise into you. But that's not information, it's not wisdom, and it's not insight. So ask yourself every single day, is that event that took place, is that tweet that took place, is that government official said something, or some airplane gets shot down, is this a short noise? And does that data provide you wisdom and insight for the next 5, 10, 15 years? I'm managing $100 billion. I can't go in and out of assets on a daily basis because somebody tells us. We don't like to pay assets on a daily. And so we're buying assets for good times and bad times. And for over 5, 10, 15 years, I think we'll do very well by staying that long.
So my next question is one, again, I get asked all the time, and I've never been able to actually ask the question to somebody else, so this is pretty special for me, and that is, the venture program at OMERS. To put it into context, we manage roughly $600 million in assets today in the venture program in a portfolio of $100 billion. The obvious question that somebody could ask, and I get asked all the time, is why the hell does OMERS do ventures? I mean, it's a rounding error. I walk into the boardroom when you invite me, and I feel I have a size complex most of the time because everybody's talking billions, and I'm here saying, hey, don't forget about us. So why is it that the organization has been so supportive of the venture program and continues to double down?
Yeah, so we are very fortunate at OMERS. We started the venture program about 10 years ago. Before everybody talked about it, there's two things. First of all, we hope to make a decent return on the venture business. I think that has to be table stakes. The second thing is that we should be able to provide insights from those 40 portfolio companies, from the insights that benefit meaningfully the rest of the organization. And the other thing is that it's not just benefiting OMERS and how we think, but using the knowledge in our venture companies. We have 32 big investments. Average transaction size is about $1 billion to $2 billion. Imagine the insight that we can have through our venture companies on technology, on innovation, on people strategies, all these things that are taking place. We own Yorkdale Mall, and we own lots of real estate around the world.